When selecting a stockbroker, many customers go with the one offering them the lowest brokerage rates. Some behave quite mindlessly, falling for the first broker whose representative approaches them and in many cases offers an inducement. But especially if you're a stock trader, you should go with a broker who can meet your specific requirements, says Tejas Khoday, Chief Executive Officer and co-founder of FYERS, a new age broking firm. In this interview with Business Standard, Mr. Khoday delves at length on the criteria you should apply when selecting a stockbroker. He also talks about the regulatory changes in recent years that have rendered the stockbroking space much safer and made a repeat of the Carvey kind of fiasco nearly impossible. Do watch this interview to learn more. Welcome to our show, Mr. Khoday.
Thanks for having me, Sanjay.
So our goal for this interview will be to help our viewers learn how to select a stockbroker. Most people don't really give it a lot of conscious thought. Often they go for the firm whose representative approaches them, or say at the time of opening a bank account, they're also asked to also open a demat account and they do so. So what would your suggestion be? How should people go about selecting a stockbroker? There are so many of them these days. How does one narrow down the list and especially eliminate the more risky ones?
That's a very broad question, Sanjay. I would actually like to begin by saying that a trader or a retail investor needs to know what they want to begin with. Not every broker caters to every requirement thoroughly. And so as long as they understand and know what they are looking for beforehand, that little bit of research will go a long way in making sure that they don't make any mistakes. So I'd say there's laundry list of do's and don'ts. But I would say if you want me to begin with just trying to narrow down on what they should not do, they should perhaps avoid sketchy brokers who promise returns, who guarantee returns, and who sell you dreams. So that's like the number one red flag that one must avoid to begin with. And the rest, there are a lot of points that I can go on and on about, yeah.
So these days, every day we see fresh brokerage rates being announced. How much weight should one give to the brokerage rate?
So there was a time when brokerage rates would give a broker a competitive advantage, but the way the industry is right now, the brokerage rates are more or less saturated at 20 rupees per order. And with the rising cost of doing the business due to compliance, technology, and just inflation in general over the last 1 decade, I think brokerage rates ought to go up, and price is not necessarily an advantage, so to speak. It's more about what a broker can do for you and how they can add value, I think matters more than how much they charge at the moment. Because competition by itself will not allow a broker to overprice.
So incidents of brokerage defaults also used to be very common. I think they have become less common over the past 1 year or so. Are there any telltale signs? Can a customer know in advance that a broker could default? Are there any signs?
It's very difficult. It's very difficult for a retail customer to know if a broker can default. The number one red flag would be if the payouts are consistently delayed. Although there can be other reasons for that, that could be a red flag. But there's not much a retail customer can do beyond, believing rumors and the delayed payouts. So to address this problem, the regulator has done a fantastic job of increasing net worth requirements, increasing compliance and reporting standards among brokerages, and also putting out a list of defaulting members on their website. I would say the number of defaulting brokers has reduced and will continue to reduce simply because of the regulatory oversight that we have today. And so yeah, I mean, a sure shot way of kind of preventing this pitfall, right, of choosing a broker that might go under for whatsoever reasons is just to maybe pick brokers who have a reasonably high net worth and who are doing well and who are not necessarily known for breaking rules or doing anything non-compliant. I think as long as one is looking out for these things, I think they should be good mostly.
Is there a source from which one can check the net worth of brokers? Where can one look up this number?
I think the only reliable way of doing it is to study the broker's balance sheet and financial statements that are published on the Registrar of Companies website. Considering many brokers tend to be privately owned companies, there is no other way to actually get this data. I do understand that retail customers may not be all that bothered, considering they do come in with smaller amounts of their savings to invest in. More often than not, they spread their portfolio across 2 to 3 brokers, just as a matter of diversification to reduce their risks, right? So, yeah.
Now, earlier, brokers used to attract customers by offering high leverage. Does that still happen now?
No, it can't happen now. Because last year, what happened is SEBI introduced something known as the peak margin rules. What that essentially does is it prevents the broker from offering any additional leverage over and above the exchange prescribed margins. So let's take, for instance, an options trader who wants to sell, let's say, 1 lot of Bank Nifty options. If let's say the 1 lot of Bank Nifty option requires 1 lakh in margins, the broker would fund that intraday to maybe 4x extent, in the sense that he could take that trade with just 20 to 25,000 rupees in his account instead of having the full 1 lakh rupees. So brokers were actually competing by offering excessive leverage, but that can no longer happen, and as a result, that actually safeguards the broking ecosystem. It reduces risks also for the customers to a great extent.
Now, should long-term buy and hold investors select their brokers differently from a trader?
Yes, because a long-term investor's requirements are very different. He does not transact in the markets every day. I think a long-term investor can trade with almost any broker. It doesn't matter as long as they are assured that the broker will stick around. But if a trader were to choose a brokerage, he has to pay attention to like 10, 20 other parameters, which matter a lot because he's entering and exiting stocks and instruments every other day and many times a day. And so he has to pay attention to the technological aspects of the platform, and not just one, many, like latency, uptime, the number of features, indicators. There is a laundry list of features and things that one may have to consider before choosing a broker, especially for retail traders. But for long-term investors, I don't think it matters all that much, as long as they're sure of 2 things: that the broker will be around. Number 2 is if the securities are not misappropriated.
Who should go for a full service broker and who should go for a discount broker?
I think those terminologies are kind of outdated, because there is no such thing as a discount broker anymore. Or it's like almost everybody is a discount brokerage today. Like the banks offer the same rates as discount brokers and vice versa, right? Because the rates have merged and they've gone down a lot. And so it's about how much value a broker can add to the trader, and what kind of differentiated offerings do they really have. That's what really counts, because if you look at what a bank does, is that that focus area is very different from what maybe a tech focused broker is looking at.
How is it different?
So take us, for instance. So we are very clear, right? So we want to focus on active traders and investors, primarily day traders, swing traders, and to some extent positional traders. That is largely our cohort of users. And so they have very specific needs when it comes to trading. It can be latency, it can be easy to use APIs for algo trading, it can be cleaned out historical data, it can be access to unique features that can help them to decide on what to trade and when to trade. These are not things which maybe a bank broker necessarily wants to focus on. Yeah.
Now, should downtime or tech glitches on the platform or the app be an important consideration? And if so, then how does one get information about it? Which broker's tech platform is more reliable, whose is not?
Right. This used to be a huge problem. There was no mechanism in place to actually make sure that a broker is held responsible and accountable for downtime or any platform outage. But of late, regulators have taken this up very seriously. We as a brokerage are required to not just report the tech glitches to the relevant exchanges within 30 minutes of it occurring, but we're also supposed to submit a root cause analysis and a solution to the problem within 24 hours. And what this does is it ensures that brokers are actually paying attention to technology. And those who aren't able to, I don't know how long they will be able to survive. Also, the penalty structures for platform outages is significant. And if I was to take a guess, it will only increase. So from a regulatory standpoint, they've figured out a way to make brokers and the top management at brokerages like directors and CEOs and CTOs accountable for outages.
As a customer, how do I get to know whose platform is more reliable? Is there a way to check this?
The easiest way is reviews. I think the word of mouth goes around faster than anything else, especially with how active traders are on Twitter and so on and other platforms. But there is no one dashboard that on an exchange level or on a regulatory level that showcases this. I'm sure this will happen in the near future. I believe it is in the making, but right now they've got one part right. Maybe in the future, that information will be transparent as well.
How do I get to know which broker addresses customer complaints promptly?
Well, the statistics are available on the exchange's websites, right? So you can get the numbers there, but you can't really understand the attitude of the broker towards the customer's problems looking at those statistics. So that you can only know by experience and maybe reviews and word of mouth of your friends who have used the platforms. There is no other way around it, I think.
Should one look for a certain minimum size of brokers, say in terms of number of clients? You said that net worth should be one criterion. Should one also go by number of clients?
Well, it actually depends on what the trader is looking for. So, for instance, let's take the example of any broker who has, say, 50 lakh customers and above, right? Now, such a broker, the priorities of such a broker are very different from, say, a broker catering to a very niche audience. Like maybe someone's catering to only HNI traders doing a certain set of strategies, or somebody who's working only with professional traders. So I think it's based on what you're looking for rather than this number of customers. See, this number of customers thing is very delusional, if you ask me.
Why?
Larger
Why is
is
so?
not, larger brokers are not necessarily better, because their priorities tend to be all over the place. Like if a company is trying to build everything for everyone, somewhere down the line, they won't be able to cater to specific needs. And so I strongly believe that committed traders should look for brokers whose promoters have been traders themselves, who also understand the problems, who have the in-house capabilities to go out and solve those problems over a period of time. So if let's say a brokerage is promoted by people who do not actually trade or invest, and who are doing this solely to earn an income. I mean, of course, everybody is doing it to earn an income, but let's just say that they're not attuned with all the intricacies of the business and the customer's requirements. Then you're going to have a mismatch, and that puzzle is never really going to fit. It's never going to come together properly, because how the management team will perceive the business and will never really match the customer's expectations.
Okay. So the needs
it's like if you take the example of say a gaming app like chess.com, for instance, right? Imagine if it was built by somebody or imagine if it was run by somebody who doesn't know the rules of chess. You know what I mean? So of course, the reason it's successful is because the people who built it are very passionate about the game, and they want the game itself to get better, and they want more people to play chess. And so that's how we look at it, at least.
Is it better to stay away from brokers who engage in proprietary trading?
I used to be very vocal about this topic. Once upon a time, it made sense to not do proprietary trading simply because there were not enough checks and balances to ensure that the broker does not use the customer's funds to trade. For a long time, there was no way the exchange would even get to know if a broker is using the customer's funds to trade or not. They wouldn't know the source of funds, essentially. Now, in the last 4 to 5 years, the number of changes that have taken place in the broking industry kind of eradicates the possibility of a broker misappropriating client funds and diverting clients' funds to take trades. And if it does happen, they're going to get caught in like less than 90 days almost. Yeah. So the chances of misappropriation have diminished. And so now I don't think it's such a big deal. And brokers, I don't think prop trading can be used as a reason to avoid brokers anymore. So because the client level segregation is set in stone now.
Could you elaborate a bit on what changes SEBI has made to make it difficult for brokers to play around with clients' money and securities? Can they also play around with their securities? I think earlier that used to happen.
Of course. So after two big mishaps, number one, the IL&FS crisis. Number two is Carvey scandal, right? So Carvey scandal was essentially a misappropriation of customer securities, where they diverted customer securities, repledged them with NBFCs and banks to raise funds for real estate investments, I think, outside the stock markets itself. So that was a wake-up call, I think, for the regulator. And diversion of funds has been around for quite some time. It actually was a menace, because what actually happens behind the scenes at a brokerage is that customers' funds get pooled at the broker level. So if, let's say, there are 1,000 customers who transfer money to the broker, right? It all gets pooled at the broker level and then redeposited with the clearing corporations in such a way so that the clients enjoy the trading limits, right? So there was no way that they could actually figure out how exactly the broker manages this pooled funds of the customers. And so now there is a method to monitor. There is also a set of rules that all brokers will have to comply with in such a way that customer funds are segregated on a client level and segregated on a segment level as well. And so that's one thing. Apart from that, the pledge and a repledge mechanism is another big deal that happened last year. Also, non-POA demat accounts. So the regulator has launched something known as EDIS, which eventually led to DDPI. So these are basically small tech innovations to make sure that the broker does not take undue advantage of the power of attorney that used to be given in favor of the broker to move securities for settlement. So with this, like, let's say if a customer wants to sell a stock, right? He can do it through an OTP as a verification. Earlier, because a client would sign a power of attorney in favor of a brokerage, he didn't need to do that. And so it was pre-approved by the client. So they had the authority to move it anywhere and nobody could dispute that. And so, yeah, I mean, these are very big changes, and it has drastically reduced the scope for frauds and embezzlement.
So I have finished with most of my questions. Let us go back to the initial question. If I am looking to open a brokerage account today, what are some of the 2 or 3 top criteria I should apply when selecting a broker?
If I have to split them up into do's and don'ts, right, and assuming that you are an active trader, let's say, or somebody who at least wants to get in and out of the markets, time the markets to some degree to enhance your returns, I'd say it makes sense to choose a broker whose founders themselves have been committed traders in the past, because they will genuinely understand what you require. And they will build a team inside to ensure that your requirements are met over a period of time. And so the vision of the company needs to be very clear. It can't be that you go chasing after a brand that is known for something else, such as maybe lending or manufacturing goods. And because they are well known, they're also likely to be a good fintech broker. I don't think that makes sense. So that's one of the things. Also, I think I've been saying this for a long time. Technologists don't understand broking, and brokers don't understand technologies. Right? It's generally brokers are handicapped when it comes to anything to do with technology. So it makes sense to choose a broker that actually understands technology, because they need to know both to some degree, at least. So that level of confidence is required in a brokerage, especially if you're going to be an active trader. So it's a company that's trying to be everything for everybody is unlikely to do a good job, if you ask me. Right? So always choose a broker who focuses on depth over breadth. I think that's extremely important. And another thing that's very common in the financial services business is that customers are looked at as milking cows, but in reality, they are like butterflies in the sense, like the general traditional way to look at a customer is bring the cow inside the farm, and then once they're in, they can't get out, and you can milk them dry as much as you want to, and as for as long as it lasts, type of approach. I think that's counterproductive in the medium to long term, because if that's the case, customers will not stay. The reality is that they will not stay because they're like butterflies, not like cows. The minute they see that they might get trapped, they will tend to avoid it from a distance. And so you'll have to look at customers as people who come here for a specific need, and once those needs are met, they'll come back whenever else they want to. You can't trap them in and keep trying to suck out revenues out of them. And so at least that's what we believe, right? If as a company you don't believe that, then your priorities are going to be all over the place. And so that's what that I think matters. And I think traders should not get too carried away with big brands. The matter of fact is that elephants don't feed on grass, they feed on trees and a large vegetation. Why? Because the grass doesn't fulfill their appetite, I suppose. It's obvious. So likewise, the very large conglomerate companies generally don't pay too much attention to the finer requirements of small people, simply because it doesn't generate sufficient revenues. It doesn't fulfill their appetite, essentially. So yeah, that's that. And lastly, I would say choose a broker that has the ability to evolve fast, because I think for the first time in history, in the last 5 years, the regulator is several steps ahead of the brokerages and other market intermediaries. So they're so fast that everybody else is finding it hard to catch up with them, which is a great problem to actually have, because the steps that they are taking are good for the end users, you know. And so I think the ability to adapt and adapt fast is going to make a huge difference. And I think one should choose a broker that welcomes changes, especially regulatory changes. And yeah, I mean, it's hard to win if you're always whining about the rules. Right. So that's what I think in a gist.
So your essential message is that customers must understand their own needs, and then they should go for a broker who can cater to them. Especially the
That's
background
right.
of the promoter becomes very important. Somebody who has himself or herself done trading and understands the needs of traders. And of course, the regulatory environment is changing at a very fast pace. So you need to be with a broker that can adapt to the changing landscape. Thank you, Mr. Khoday. It has been a pleasure speaking to you. I'm sure our viewers will learn immensely from watching this interaction. Thank you and have a good day.
Thanks, Sanjay. It was a pleasure.